Proud supporters of Africa this week. Engine, with us, you are number one.
Delegates from have gathered in Cape Town, South Africa for the 2011 Climate Investment Funds Partnership Forum. This is where global thinkers will discuss funding decisions on climate-friendly development worldwide. We spoke to Hila Sheikh-Rahuhu, Director of Energy, Environment and Climate Change at the African Development Bank.
Our continent, unfortunately, while having contributed very little to climate change, actually the carbon footprint of Africa is 4% of the global greenhouse gas emissions, yet our region is one of the most vulnerable in terms of changes in temperature, rainfall patterns, coastal defenses, etc., which make us quite vulnerable and which requires, according to the estimates, up to $40 billion a year of additional investments to make our agriculture more resilient, to make our roads and railways and our electricity more adapted to the realities of the new climate.
In terms of an approach to the solution, which is the best way? Should we be going the mitigation route, going out with all-out prevention strategies, or adapting the resources we already have to the situation as it unfolds?
Well, I think we need a bit of both. The opportunity that Africa has is that in terms of mitigation, it can help globally in a substantial way if it is offered additional financial resources to help it choose to go with the renewable energy resources and to help it fight the deforestation. We have in the Central Africa region the second lung of the earth, which is threatened with heavy wood cutting because of lack of alternatives. So if we are able to channel more resources to Africa, we could reverse this trend. On the adaptation side, of course, we also have huge needs in terms of added financing to make our roads more robust, our buildings more resilient to disasters, our agriculture more used to irrigation and less dependent on rainfall, and then etc. All these sorts of investments are needed in Africa.
Now, Hela, you talk about at least $40 billion needed per annum to tackle the range of problems. Any investor who wants to be part of an investment solution is not looking to be charitable, also wants to see viable, commercially viable initiatives. What are they? Because a lot of the debates are looking at the merits of wind versus solar versus renewables. Where should the investments be going?
You're absolutely right. The beauty is that in Africa, we can actually offer commercial opportunities for those investors who want to make money and, by the way, do good. You're absolutely right that Africa is endowed with a lot of renewable resources, ranging from hydropower, like the ability to generate energy from its large water resources, only 8% of that is developed, or geothermal, it's like the energy coming from the heat in volcanic countries, that's for the Eastern Africa region, a significant resource, to going to the wind and the more expensive one, which is the solar. However, to harness this, we need to have smart ways of blending financial resources. So we have the stream of investors who are looking at the commercial aspect, and we also have the developed countries looking for countries in the world that can help them fight the global warming. So they can channel concessional financial resources that can be mixed with the commercial money and make projects happen in a more robust way and while making everybody satisfied.
The African Investment Summit has concluded in Johannesburg. The event sought to identify investor-friendly instruments for opportunities in African markets. Gigonyo Gitonga, Managing Director of CB Richard Ellis in Kenya, gave his insight.
It was an opportunity for us to interact with private equity fund managers and various investors in Africa. Obviously now what's happening is there's a great interest in Africa. There is every company, multinational corporation is looking to invest in Africa, and they're looking for various opportunities.
All right, let's start off with the one dimension of investments which are seen to be at least a great hedge against mega risk that exists in Africa, those exchange traded funds. What was said about them?
Well, with the exchange traded funds, I think there was more of a focus on the real estate and infrastructure. It's being realized that now infrastructure is going to become a big growth area in Kenya, in Africa as a whole, and especially in terms of oil, gas, energy sector, the water sector. And this was to try and showcase this to private equity funds that there is opportunity for them to invest in infrastructure.
All right. So although the conference was predicated on a heavy discussion of exchange-traded funds, in the end, it was superseded by other issues.
Yes.
Okay. Let's talk about those property investments as a safe haven and an alternative investment. Some will say, great, you know, property, when you track it against the bourse, largely it performs well or has done so in recent years. But the problem in many African states is land rights, tenure on land and security of that investment. How are those issues addressed?
I think what we've just generally seen across Africa is that there has been a lot of increased governance and transparency. And to be able to attract foreign investments, people need to have proper rights secured and to be sure that there is legal and judicial reforms that have taken place in Africa. And it's certainly been there's certainly been a lot of reforms in most of the African countries, which are then be able to encourage foreign investments.
All right, so we're talking private equity that would probably identify non-listed assets, invest in them, give them value. A lot of deals, though, are financed through debt. And so as a result, a business comes into Africa and incurs liabilities at the onset.
Yes.
How do they go around adding value, raising capital, trying to alleviate those debts, those burdens on their investments?
I think there's going to be more, with the development of the capital markets in Africa and the stock exchange, we're going to start seeing a lot more listed funds in Africa. There's a lot of regulations that are taking place, reforms in Kenya, the development of REITs, listed property funds are going to be the next frontier that we're going to see in Africa.
Kenya's shilling hit a new low of 91.90 this Wednesday, but recovered on Thursday after the central bank said it would take regulatory action against commercial banks it believed had taken speculative positions. We reviewed the battered currency with Stephen Agada, head of portfolio sales at Dye & Blair Investment Bank.
The role of the CBK is basically to try and establish calmness and stability in the market. So what they try to prevent is panic in terms of currency movement.
All right, now the shilling still very much a worry, although it's gotten a little bit more defensive today. We're seeing something like $237 million leaving the economy in outflows. Those who are currency traders, how do they respond in terms of explaining that phenomenon?
Well, it's quite a mixture, really, of a bit of demand from corporates, a bit of import bill in terms of fuel, in terms of food, but at the same time, we're experiencing very little forex inflows coming in.
Pricing of Kenya's assets becomes a worry at a time like this because the CBK has to decide on what's a suitable lending rate, and then the banks come into the market, lend to each other, also borrow from the CBK, and then invest in government securities that are priced at a totally different rate. As a result, that differential is leading to some making money, and there's just fear of arbitrage. Are you concerned?
Well, of course, in a liberal market, free market economy, there'll always be arbitrage opportunities which most traders try to take advantage of. But that notwithstanding, various participants in the market make reference to various rates while pricing their trades. For example, the CBR has not been a favorite for banks, but you're seeing currently with the liquidity tightness, the CBR is actually being used by banks which are borrowing from the central bank. And you're also finding that the interbank rate is now moving upwards, is edging upwards to match the CBR rate. So we are establishing some parity of some sort.
Monetary policy tightening, that seems to be what people are arguing should be happening. The CBK should be raising interest rates further than what they've done in the last two MPCs. There could be room for this to happen outside of an MPC sometime in July. What should the CBK be doing? How boldly should they be raising?
Well, the CBK is in a catch-22 situation because what's happening is that they're trying to maintain a low interest rate regime so as to enhance growth so that people can borrow and expand the economy. But they're finding themselves in a situation where there's high inflation, a depreciating currency. So there's only so much they can go to because they cannot, currently CBR is at about 6.25%. Probably in the next meeting they may raise it maybe by another 25 basis points, but not really farther than that. And
that is a dilemma, Stephen, in the sense that without decisive action from the CBK, it doesn't make Kenyan treasuries and bonds very attractive. There is a sense that even if they were to hike interest rates, so far it hasn't worked. So limited options, it seems, available to the CBK.
Yes, definitely. You see, what's happening is that while yes, they would really love to raise rates further, so as to shore up the shilling and make it more stronger, attract more foreign inflows. But at the same time, the government does not want to contract debt that is very expensive. So we're in a situation where there'll be the short-end rates are edging upwards, while the long-end rates are more or less stable. So the yield curve tends to be inverted.